Hello, this is Dave, and welcome to Equity Story. It's a wonderful day. Well, maybe not so much a wonderful day because what we saw is obviously the Dow got sold off really strongly last night. But guess what? We've been predicting it. We've been telling you this is going to happen for like the last 2 months. So very, very simple. And we're going to give you more predictions. We're going to tell you where the market's going to go. I'm only going to do this. I've got 10 minutes. So watch out. You need to understand price action. You need to understand the market. So this is the start of a pullback, and when here's the Dow, and we're down. I think there's a bit of panic out there. We're down 4 or 5%. Really quite normal. So if you look at the world at the moment, like we said, you've got inflation, you've got the Fed who are in inflation, having to put up interest rates. You've got companies' earnings. All these. If you look at the Dow now, all these earnings at the top here are around sort of record. We've had record earnings for a while now for a lot of the top companies on the Dow. This is going to change with these margin pressures, these squeezes in margins. All these will go down. So what's going to happen is the market will re-rate companies, and they're going to rate P ratios. At the moment, I think if you look at the Dow, I think the average P is around 70. Well, that could come down to 12. So where are we going to go? Well, firstly, it would be if I squashed up the charts, and this is why the charts make it so easy. If you look at the charts, we were trading only 2 years ago, 2020, right, around this sort of 25, 26, 27,000 level. It would be totally normal in this environment, which is, this is a worse environment, by the way, than I think we had in 2008 when we had this prime issue. Well, guess what? Interest rates were higher. We had all this. We could lower the interest rates. The Fed, I think they're only about 4 trillion in debt now. They're 30 trillion. I mean, so we haven't got as many tools to try and cope with this situation, and we look like we're going to go low. So for me, I look at this and I take a very simple view of it. It'd be very normal to come back to that 26,000 level. It might not happen. What normally happens is that you come down, you have a bounce, you go down again. I'll show you. Look at the price action that we had back in. That's normal. Come down, have a bounce, come down again. So, and most probably that final capitulation will be when the market realizes that putting up the interest rates by 2% isn't going to do much towards inflation. It's not going to help it. It's going to have to be a lot more, and then we're going to see a little bit more panic. So I think we're going to go lower. Maybe worst case scenario is 20,000. That's still a long way to go. And is that possible? Very, very easily. I mean, one thing that I'd be amazed, obviously we found support and bounce. Maybe the only thing that could do that would be some peace in Ukraine. At the moment, it doesn't look like we're going to get that. So things are very, 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 very difficult. And like we said last week and the week before, cash is king, right? Because what you can buy for your money in maybe 6 months to 12 months from now, it could be a lot more than what you can buy for it right now. So Dave, how does that? Let's have a look at the Nasdaq. So the Nasdaq's had a bigger move. That's come down from 16,000 to 11,000. I think maybe we could come down to 8,000. That's what's that? 50%. That's highly, highly likely, and really, from a charting point of view, be quite normal. I mean, you'd be in some ways, and maybe around there, that's where we're going to start getting interest again. Maybe some of the tech stocks. Just explain to you, obviously markets are fear and greed. That's the big thing about markets, is fear and greed. And at the moment, we're starting to get a little bit of fear. These big spikes you can see are obviously subprime, where the market absolutely terrified. It went up to around 90 recently. With COVID, it went up to around 80. Well, we've got a lot more to go, and maybe the VIX could go up to around that 60 level, and maybe that'll be the catalyst as well. We look at that VIX, the fear index, to start seeing the market to really sell off. So that's the long term. That's our sort of a long-term view generally of the world markets. Obviously, they're going to go down. Now, it doesn't mean we're not going to have lots of nice little bounces. We could have one tonight, so that's absolutely fine. But I think it's very important you understand exactly where you're going to go, so you can decide, okay, right, maybe I'm just going to hide in some defensive stocks like Coles, or it gives me a nice little dividend, it gives me a little bit more. So that's absolutely great. I'm just going to hide away in cash, or when I trade, I'm just going to be a lot more aggressive, or I'm going to just stick to the stocks that Dave tells me to buy on Equity Story. Right. So we've done pretty well so far this year. Before I go onto those stocks, and let's do them first. So yesterday we suggested Orica. We like it. Reason it's going up. You know what? It's holding up really well today. So nothing's changed. Same with CRN. In a way, these are the war stocks, aren't they? The stocks that are really benefiting from the commodity. Again, the chart looks great. A little bit down today, most probably an opportunity. A Grain Corp holding above $10 looks absolutely great. So again, these are buys for us. And when you look at Grain Corp, all the issues around the world, Ukraine, the American wheat stocks are not looking good. India, likewise, have stopped exporting wheat. The world food shortages are serious. I mean, the Germans are telling people to stock your food for 10 days. The governor of England saying the food shortage could be apocalyptic. Big word, but for the governor, Reserve Bank of England, the governor of Reserve Bank of England start talking like that, well, you got to like Grain Corp, haven't you? And obviously BPT, just to play on those sort of oil plays. So, fine, down a bit today, but the general idea, I think, over the next sort of 3 months, hopefully, those sort of areas we can make some money. We had some announcements today. The classic one was Aristocrat. Nice little buyback there. Very supportive of the share price. Would I be buying it? I still think the environment's just not the right place. It's below trend. What we could say, we could look at Aristocrat. We could say, okay, you'd be a good boy for us. You get over that 33 on a monthly. We'll take a long-term view of you. Absolutely fine. Again, the earnings were up. The profits were up. Everything's looking good, right? The company's hitting goals. Certainly, one of the better stories around at the moment, and one that we've got to look at to take a long-term view. But what we like at Equity Story, we want to mix these fundamentals with the charts, and not quite there for us just yet. Good news, obviously, with Ramsey. Looks like let's get this back on the weekly. Looks like KKK say, yeah, everything's looking good with this deal. So let's hope that goes through for shareholders of Ramsey. That's a really timely takeover for Ramsey shareholders. So hopefully they could be putting that money for good work in a few months as well. Again, these sections that are doing well, we saw, we've been had NUF on Einstein's as a trending stock, and again it's doing very, very well. So if I look at the numbers here, bear with me because I've got my lead analyst who I normally do this with. He's away, but he's back next week. So looking forward to obviously getting the wolf back. But let's have first look at AAC. So Australian beef. Listen, you've got to love the chart. I don't like the company being a vegan. Poor little cows, but you know what? They're doing very, very well, and their operating efficiency is superb. So they're obviously slaughtering those cows in a very efficient manner. So I suppose you got to say well done for doing what you're doing in an efficient manner. But their operating profit was 49.9 million versus 24.4. Very, very strong, really, really strong growth. And again, if you're in that stock at the moment, let's have a look. Would you be buying? Well, you're definitely going to be holding it. I think I'd wait for, if you're going to buy it, you want to buy off the daily chart. But certainly hit our target price. It's already been there. And arguably, even though I'm a vegan, I'd have to trend it again at the right time. And again, New Farm, which has been doing extremely, extremely well for us. Let's have a look at New Farm a little bit here. They're unlike EBITDA up 41%. So, and when you look at what the company says, the outlook for full year remains positive. Current industry conditions are highly favorable with grain prices likely to remain elevated. And of course they are with the situation we've got around the world at the moment. Again, if you're in that story, you're going to be holding it. Strong announcement. Are you going to be buying it? Yeah, just wait. I'm going to tell you when to buy it. That's what I do. That's what the Hound does. That's what we do. Equity Story. We'll tell you when to buy it, but certainly if you're in it, maybe you're holding it. Before we go, I've been telling you about doom and gloom, but our markets, the XJO, is holding up really, really well. But I fear not for long. America sneezes, we catch a cold. I think America's actually going to catch a cold, so I don't know what we're going to get. We're going to get some really bad version of COVID or something. So I do expect this sometime, even though obviously commodities are holding us up really well, and the banks are, Aussie banks, come on, they're a good place to put your for a dividend, to hide some money. And I think wouldn't be surprised if a lot of money around the world would be going to look at some of these Aussie banks at 4 or 5%. So BHP, Rio, it's holding up our XGO, but I do think eventually we do crack below 7,000, and first support would be around that 6,657. All in all, don't be disheartened. Property, stock market's going down, just gives us fantastic opportunities to buy stocks. We just want to make sure you're ready and you're cashed up and you've got that cash. So when we tell you to buy, bang, in you go. On that note, thanks for listening to Equity Story. We got Ask the Analyst live tomorrow. So those of you who are not used to Ask the Equity Story, come on live tomorrow. We're going to answer all your questions live. We're going to look at the charts, and I really look forward to doing that. And of course, we've got quite a few new trialists at the moment and new members, and hopefully you enjoy the service that we give here. On that note, everyone have a wonderful day, and I look forward to talking tomorrow. And I equally look forward to obviously having my lead analyst Wolf back with me on these talks fairly soon. Thank you very much, and have a lovely day. Bye.